National insurance and how it all began. Does anybody know why national insurance was introduced? The Social Security arrangement was introduced on the 5th of July 1948. The flat rate of NIC to be deducted from pay was subject to minimum hours being worked each week. The collection of NIC under the national insurance legislation was to finance the provision of the flat rate state benefits, e.g. pension, sickness benefit and unemployment benefit as it was then called. State benefits were not related to earnings but were based on a number of flat rate NICs paid. In April 1999, 2000 and 2001, major changes were made to the way NIC were calculated. In April 2003, the NIC percentage rates were increased by 1%. And no doubt there'll be further increases in the future. Class 1 national insurance thresholds are reviewed each year. Although they have been generally increased in line with the price of inflation, there are no specific rules for automatic annual increases like there are with tax thresholds and allowances. NIC has various earning thresholds on which NIC is calculated, and it is important to understand how NIC is calculated as it will have a knock-on effect on your payroll. So NIC thresholds. The lower earnings limit, the obligation is to align the value of the lower earnings limit with the value of the state pension was repealed in the Pensions Act 2007, effective 2011-12. This means any increases to the LEL from 2012-13 are not automatic and require parliamentary approval on each year. Only weekly rate is defined in regulation. The value of other earning periods are calculated according to statutory rules. The primary threshold represents the earnings of which national insurance becomes payable by the employee. The secondary threshold is the threshold at which earnings become payable by the employer. The weekly, monthly and annual values are defined in regulation. The values and other earnings period are calculated according to statutory rules. The upper earnings limit, there are no statutory rules governing the level of the upper earnings limit. Any increases or decreases is the discretionary of the Treasury and subject to parliamentary approval. The upper secondary threshold in its first year of operation in 2015-16 represents the upper band of NIable earnings starting at the secondary threshold on which no NI insurance is payable by the employer and is aligned to the upper earnings level. There is no statutory rules on how this is increased or decreased.